Hello from another weekly options trading update video. This is week 34. So last week, week 33, I didn't make any video because I didn't do any trades. These days, I'm not feeling much safe to make any trades, but this week I was able to close two trades, which I opened in the previous weeks. Also open some 4 or 5 new trades. I will show them in a minute. Before that, maybe a little bit of numbers. I completed so far since 34 weeks 222 trades and I profit $102,000 and my win rate is around 91% and my monthly average is around 12,000 and weekly is almost 3,000. Right now I have 17 open positions, mostly they're leaps and a few call credit spreads. So let's jump into this week's trades. I will click here to week 2. So here are my trades. I close one leaps contracts of my Netflix, which I have opened on January. And I have another call credit spreads here for United Airlines. I have opened this one at the end of March and I was able to close it just this week on 7th of April with a $91 profit. So, and for Netflix, yeah, it was going so much down because of the Warner Bros. Deal. So meanwhile, I was buying a lot of Netflix contracts, Leaps contracts. I bought, I think, like 16. So I'm selling them on the way going up. So right now I have 4 more. I'm around like 17-15% profit on those. So I'm waiting somewhere around 20. So this one reached out to 19%. So I decided sold it with $800. And the next one was United Airlines. So this is the chart, United Airlines. So 23rd is here. I opened this one right here. It was close to 200-day moving average. And I'm thinking airlines companies, most of airline companies are way below the 200-day moving average. I think United Airlines is high considering other similar market stocks. So that's why I decided to open a call credit spread. My strike price is around here, 115, so around like all-time high. I think in the current market with the oil crisis, I don't think it will go to all-time high levels. Even though it increased in last 3 days, I was able to automatically exit from trade on this day, 7th of April, when there's this big drop and touch to lower Bollinger Band and my trade is automatically closed with 50% profit taker. So again, like it's very important to have those automatic profit takers because next day everything went 10% up and I could lose that profit. So as you can see here, I enter the trade like 0.94 and I exit 0.47 and I had 2 contracts and I made like $91 profit. And I opened another call credit spreads this week. And other than my Amazon trades, let's finish this one and go to Amazon. So here the Costco chart. I opened the trade on 7th. 7th was on this day. It was touching the upper band and it went up from the stochastic indicator around like 90 levels. And again, like considering the current financial situation in the market, my idea is it will either like stay same or go a little bit of down from these levels to maybe like mid Bollinger Band and lower Bollinger Band. So right now I'm like around like 30%, 40% in profit. So I think if it continues a little bit more down, I will be able to exit from this one. So my strike price is 180 to 185, right around here. So 180 is well above the all-time high. Again, my thesis is similar in this market conditions. It, at least in the short term, I don't think it will go all-time high levels. My expiration with this one is May 15, so there's like 1 month. So right now it's almost close to my target levels, so I might exit way before May 15 from this one, like next week, but we'll see. So that was call credit spreads. I open and close. So the other ones is three short calls I open, and all of them is Amazon. So I'm doing wheel strategy on Amazon. Right now I have stocks. So I think Amazon went so much up right now. I think, yeah, it is very close to all-time high levels. I'm thinking it can get slowed down a little bit or more like go down a little bit. But either way, I'm okay with selling those stocks on those prices because my average price on those is way below these levels. So my first one was 235, and I think I bought it around here in this jump, and it continues going up Amazon. So I open more short calls. So I open one like 255 here and 260. So or 255 and 260 is above all-time highs. So I'm okay if I get a sign. I can sell my stocks at 235, 255, and 260. And it is a good time to have actually some cash in current market. So, and I think wheel strategy is also one of the best strategy at the moment. Like right now, as far as my experience, I'm doing some like credit spreads, like put credit spreads, call credit spreads, and it is really hard to guess the way because like I'm saying, okay, it went so much down. I will open some put credit spreads, but then there's a huge war in the Middle East, so it is going way more down. So I'm getting lost put credit spread side. But I'm saying, okay, like I will do some like call credit spreads. So then in one tweet and whole stocks is going 8%, 10% down and up. So it is very hard to trade these days. So that's why I decided to not trade much until things getting normalized. So right now, that's why I'm thinking wheel strategy is the best way. So I decided to use my stocks to do that. So that's why I did three short call. If they get a sign, I will just start selling short puts. Let's say I get a sign, so I will start selling to 30 maybe short puts. So to try to get that 100 shares back at a lower price, and at the same time I'm getting some appreciation in the stocks. So then if I get assigned to 100 shares at 230, I will start selling like calls this time. I think we will have those opportunities like to seeing lower prices. Like Amazon is kind of stable stock in the past 1, 2 years. I think even though I sold my stocks at those levels, I will be able to buy them back. And again, as I mentioned, I'm still happy to have some cash at the moment in the market. So let's say I get assigned to my short puts. So I will be happy to hold my Amazons for long term. So that's why in wheel strategy, I think there is no losing. If you want to hold that stock for a long time, wheel strategy is really good in this current market situation, and premiums are really high. I get like almost like $1,500 from three trades here premium. And if they don't go those levels, I will keep them. If I get assigned, I will keep them anyway and I sold the new ones. which I will get maybe another like $1,500 profit, and that will be my monthly profit. I have a little bit of more cash, so I am thinking to do more wheel strategy in the next week. Uber is very down, MasterCard, Tesla is very down. I can open some short puts with those, and if I get a sign, if stocks keeps continue, and if I get a sign around like 20 delta, let's say on Monday, and I will start selling short calls on them. So they are the stocks I can hold for a long time. I'm okay with that. There's less risk here than having call credit spreads and put credit spreads. Even though it is little, like $500, like $1,000 risks, they have risks. It's not like wheel strategy, you are literally losing your $1,000. So that's why like I will make my strategy in the following weeks with the wheel strategy, and I will follow my open leaps contracts. I think I will close more Netflix contracts next week to get some profit from there. That was all updates from the week. I hope you are staying safe in the market and wish you a nice week in the following week, and see you next week.